If you're a Michigan property homeowner and you're trying to decipher the difference and the meaning of your tax assessment versus your tax bill, I'd like to spend just a couple of minutes to just break both of those down and elaborate on what some of those numbers mean, what some of the things that you should look out for, and if there's a possible issue, how to go ahead and try and handle that. So a couple of things. You're going to see two different things come in the mail. One you're going to get annually, so just once per year, usually goes out in January or February, and that's going to be your assessment. It's going to look something like this. And right at the top, it's very clear. It states this is not a tax bill. So that's your first indication. This is just something that's coming to you for informational purposes. On this form, the numbers that you're going to want to pay attention to primarily are your taxable value, your assessed value. So your taxable value is the number that you are actually paying taxes on. That number has an amount that is capped that it can increase by each year. So your assessed value in the state of Michigan is should be equivalent to approximately 1/2 of what your property's current market value is. So that could be very different than your taxable value, especially if you've owned your home for a long time. So the taxable value is the number that you are actually paying your property taxes on. So when you look at that on these statements, it will give you a prior year and then a current year. So it's going to show you what your previous taxable value and assessed value were, and then what it is going to go to for that next year that you're receiving your statement for. That taxable value, as I mentioned, is capped. So unless you have done a major improvement on your home or you have recently purchased, those are opportunities in which it can uncap. If you have not done either of those two things, it is capped, and it is capped at inflation thanks to Prop A. The most it can ever go up is 5%, so with a multiplier of 1.05. For 25, the multiplier in the state of Michigan is 1.031, so 3.1%. So you'll see that when you're reviewing your statement, and those are important things to look at. When you're looking at those, if you feel as though that number is grossly off, so if you multiply the number by 2, is that significantly more than what you believe your house is worth? And that's what you're going to want to pay attention to. Now, that said, your assessed value, even though it doesn't actually impact what you pay taxes on, it can come and impact you if you do go to sell your home. So if that number is also potentially off base, you want to make sure to address it. Even if it's not impacting your tax bill, it could actually impact a prospective buyer in the future who might be looking at your home and may be averse to writing an offer on it because they're afraid that if that uncaps when they purchase, that they're going to get hit with that much larger number. And if that number doesn't seem accurate to you, what the fair market might be today, that's something you still might want to address. Even if you have no intention of selling within the next year, it's good to just get ahead of that. So those are the two major things you're going to look at: taxable and assessed value. And then the assessed value is also, it's pretty much synonymous with the state equalized value. That's a value that the state believes your home is worth. And again, that should be approximately 1/2. So what is actually impacting your taxes is that taxable value. And the other couple of things to make sure you're just checking, there is a box on here that indicates the percentage that is exempt as a homestead, homeowner's principal residence. So if you are residing in the home, that should say 100%. In the state of Michigan, you're permitted one homestead, and if that's the place that is your principal residence, you have a much more reduced amount for taxes than you would if you were not occupying that home as your primary residence. So you're going to want to just double check that says 100%. If you do not occupy the home, if it's a second home or an investment home, that would be 0%. And if you own a multifamily home in which you do occupy one of the units, that percentage would be adjusted accordingly. So if it's a 2-family home, you occupy one of them, that should say 50%. So those are the big things to look at. And then finally, at the bottom of this form, it's going to indicate when the Board of Appeals meets. So that should give you, for your municipality, specific information on when the deadline is to submit. And typically they offer in-person appointments as well as written submissions. So that is something to pay very close attention to, because if you miss that deadline, you kind of have to wait until the next year to address it. So again, this is your property tax assessment statement. This is not a bill. This is something you're getting once a year, whereas your property taxes come twice a year. And this is something to pay attention to. Again, comes out January or February, and typically the Board of Appeal meets in sometime in March. So at that point, if you do appeal, when you go and do that, you're going to want to bring your case. You're going to want to show some of the comparable homes in the neighborhood and why you believe that your numbers are off. And that's something that's not always easy to find, but certainly something that I'm more than happy to help with. So able to pull comps and sort of give a comparative analysis of your home as it relates to these other homes and try and come up with that fair number to make sure that this statement is reflective of that. So I know it's a lot and certainly it can be overwhelming. A lot of people just get these in the mail and just stick them in a drawer, but it is something you want to review each and every year. There are humans behind all of this and there is human error, and I have helped clients in the past when the numbers were off and we were able to go to the Board of Appeals and they were able to be successful in having a reduced tax bill. So keep your eyes on it, and if you have any questions, always feel free to reach out. I'm here and I'm happy to help.